The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Our guest today is Bill Meridian, Cycles Research, Vienna, Austria, and New York City. He'll be on at about 10 minutes, and we're going to give him a little more time because he's got a lot to cover, and he's done such a great job so far. We certainly want to listen to what he has to say. Now, I posted a chart of the DAX, the German market, and also the FTSE, the UK market. I've also posted a picture of a treehouse from one of our listeners up in the Northwest. He trades out of that treehouse and then goes to his home there that he built with his son. But it's really an incredible thing. He's got everything there that you could possibly ask for. It's pretty cool. He built it all by hand, so I thought you'd be interested in taking a look at that. Also, I posted a chart from one of our listeners that shows the number of people that are dying in nursing homes and old age places. So raise your hand, Larry. Anyway, there's the big problem right there. Is just the secret to this coronavirus is don't get old. That's one of the secrets. So I guess social distancing is another one, but that's pretty much it. I'll take a minute here to show you what I think is happening in the S&P. And believe me, this is my 2 cents worth. But technically, folks, it can't act any better than what it's been doing over the last several days, going back to July the 7th. You'll see we made the big ABCD down into the July 8th. We rallied up yesterday to July 9th yesterday to the exact 786 to the tick, to the penny at 31.72. We then made a complete ABCD down. It dropped 70 handles all the way down to 31.05. It rallied up to 31.55. The 78% level, we came down just a little below the 78% level at 31.15, and then we come up and touch the 78% level again at the 31.45 level. Now, if we get above 31.50, that'll tell us that it's probably getting ready to break out to the upside. But 31.50 is the key price to watch this morning because it has to get above that in order to keep it going. And believe me, it can easily do that because that's nothing more than an ABCD pattern. It's nearly perfect. And, they don't work all the time, but when they do, that's an advantage. And stop and think, this is with all the news that's out there, these markets are still bouncing around looking at these key numbers. So I think it's important that we pay attention to that. That's my 2 cents worth. Now, remember, folks, yesterday, in fact, on Monday, we looked at this. On Tuesday, we looked at this. But we have to take a look. If we remember, Mr. Bill yesterday was talking about the natural gas as whether it was bullish or bearish, and long term it's bearish. We made that ABCD pattern up there at 192, and then you can see what's happened. We've backed off now all the way back to the 61% retracement of that move. We'll take a quick look at it on a 4-hour chart so you can see what's happened. But the key level, remember, folks, was at that $1.80. Once we broke below 180, that told us that we were probably going to go down. And what we did is we went down and made a 50% retracement, an ABCD pattern, almost exactly at the 382. It missed it by about two points. 200 points, and so that tells you that if you as long as you stay above 174 now, you've got a possibility of a bullish pattern in the natural gas. But remember, long term, that still could be bearish because we didn't take out the ABCD pattern at 192. So that's just part of the picture that we're looking at. If you remember, we talked about the soybeans yesterday. We got a nice rally up to that. I think we got in the November beans, we got to, I believe, 9.11, and we sold off a little bit. So there's another one that's really setting up for next week as a potential ABCD pattern to the downside. I'll be covering that in the newsletter over the weekend, especially because we've got a lot to cover, especially in the currencies, just a lot of things going on, and especially major support in that U.S. dollar index. And we'll see that we'll be able to see that. It's really interesting to see what we're watching here. Okay, let's take a quick look here at one of the things that we just mentioned, and that is this currency situation in this U.S. dollar. We flat held that 78% level. 96 is the key level in that dollar index, folks. If we go that way, then it'll be certainly different, and we'll be able to see what's happening about that. We'll know that as we get through this weekend. We'll have a pretty good idea coming in Monday if that dollar index is going to hold 96. But believe me, below 96 is really, really negative. There's no, I don't think there's any, well, from a chart standpoint, there's really no argument to be made that if you go below 96 in that U.S. dollar index, you're looking at something that is pretty ominous from a chart perspective. It's breaking all the things that we're watching. Now, this was sent to us just a little while ago before the rally started here in the Dow Jones. This comes from our friends across the pond. You'll notice that we were down there at that. Now, this is the Dow Jones futures based in Europe, so it's not the index, folks. And you'll notice that we did have a really strong rally this morning. The S&Ps rallied all the way up to 31.44. So as long as it doesn't get above 31, that 31.50, 52 level, the market has a bearish bias. And you'll notice that over the last 2 days now, the short-term indicator in the S&P is lower. We have it lower in the Russell. We have it lower in the NASDAQ. No, the NASDAQ is still up, but it went above that key level yesterday of 10,750. The early morning was at 10,748. It dropped 150 handles, then went back and made a new high at 31.77, then dropped another 150 handles. So it's got a little bit of selling coming in, but not a lot. That's the main thing to pay attention to. And finally, before we get to Bill Meridian, I wanted to mention the gold market, because if you take a look at this, just on a simple ABCD pattern formation, we went up and we made that 1829 and a half. We came down to exactly, if you remember yesterday, I talked about watch 1800. I said if it goes below that by just a little bit, it's probably a buy. And we got to 1799 and a half. And right now we rallied up to 1818. And now we're trading around 1813. So if we can get this market above 1829, we'll have a target of 1840 if it can get there. But if we go below 1800 again now, that's not a good sign, because that's telling you that this little uptrend that we've been going on since June the 16th is probably coming into a little bit of trouble, mainly because of that three-drive pattern that is there, and the fact that it didn't go blasting through there, but it could today. It could very easily do it. And if we get gold above 1850, folks, there's a very, very short distance between 1850 and 1931, which was the high back in August of 2011. And believe me, we could see 2050 in gold without any trouble at all. We'll be right back with Bill Meridian, 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we'll have Bill Meridian on shortly, folks. It's a minor technical difficulty from this end here in Tucson, Arizona, but we'll get it fixed shortly. I did post a chart sent to us by one of our listeners, very interesting chart about the silver market. You can see the very top of that chart on the left-hand side. That's when we topped in August of 2011. I happened to be in Hong Kong when that was happening, and I was being interviewed by the Wall Street Journal Asian edition, and I was saying we were making a major top in gold and silver at that time. And part of the reason for that was the fact that the open interest in gold, which had been absolutely huge, had started to drop dramatically as gold went above 1900, a high being 1931, and then of course it sold off a lot, and now we're back to those levels, at least on a temporary level at 1810, 1812 in the gold, but it has the chance of getting above that. If you remember Bill's work, Bill Meridian's work from the last time he was on 2 weeks ago, was the fact that the seasonal cyclicals for gold and silver, well, I don't think he said silver, but I know he said gold, were very strong during July and August. These are the two strongest months to be long gold, and certainly that has been the case. So we're watching, to be a buyer, just like we backed off to 1800, just a perfect $32 down from $30 down from the high, with the harmonic number being 32. So that was another reason to be looking to be buying the gold. And I still think we're bullish until we get below 1798. Then I'll have to change my mind and say we're probably getting ready to drop. Now we hit a high here in early morning in the S&P at that 31.47. Remember, I said 31.52. Anything above 31.52 would tell you that you're most probably wrong at that point. The exact 786 retracement on that little pattern that we posted here just a little while ago. Let's get this up here so you'll be able to see it here. 1 second. And you'll be able to see it came in at 31 31.45, and so far the high has been 31.47. That's why above 31.52, you have to throw in the towel at that point if you're short. And the reasoning for that is because you're coming into a situation that you're above the 78% level, and above the 78% level in a market that's as bullish as this is on a daily basis tells you that you're fighting a dead horse, and you don't want to ride that dead horse very long, because it doesn't move very much when it's laying there on its side. So remember that 31.52. That's the area that you have to say, this is where we probably stop this, and we'll see what's going on. Anyway, these are just a few of the things that we're watching here this morning here to tell you, give some idea of what's going on. Another one that's interesting, folks, that is just totally has not baffled me, because they all baffle me. But let's look here at the support that we had here in this in these Treasury bonds, because we are coming up here now looking at major resistance up here at this 82 level. You see, we started way back into March. We hit it again in April. We hit it again in May, and we're coming up into early July, and we're getting close to this 82.16 level. That's the key to be watching here. Now, if we start closing above 184, that could be a very bullish scenario. Now, you have to ask yourself, how do you get stocks up and bonds up all at the same time? And you can do that easily with the Federal Reserve, because if they're coming in and buying junk bonds, that's only a step away from buying the ETFs for stocks or whatever. So these are the things that you pay attention to, because we live in interesting times, as they say in the old Chinese curse. So remind you that this could be really interesting. You don't want to drop it very much. Had one other one that someone asked about over the weekend, yesterday, not over the weekend. The weekend hasn't come yet, is the Australian dollar. Let me see if I can get this up here for us, because it's another one, because it's not the Australian dollar, it's the Canadian dollar, because of Prime Minister Trudeau is in another scandal, but the market is not acting badly. I hope this is it. Nope, that's not it. Doggone it. I know I put it here somewhere. Let's take a quick look at it. No, that's not it either. Shut the front door and raise the rent. Here it is. Here's the Canadian dollar. And you'll see the market is really not reacting much at all. If there's a scandal, I don't think it's much of a scandal, because over the last several days, we've been in a really tight trading range. Now, we got a slight downward bias in the Canadian. We made a near 78% level way back here in early June, and we came down, rallied up, and we're in that same rally zone, 74 and change. But there is a downward bias here. I would have to say, if this gets below 7,200, which is the ABCD pattern, then I would say Mr. Trudeau is probably going to have some type of problem. Maybe the dress will come back from the cleaners and give us some more information, but we won't know that until we see what's going on. Now, I need to do something right now. I need to check these prices of what we're looking at. We're trading at 31.44 in the S&P. Not a big deal. The gold is trading at 31.16. 18.16 down to 18.13 is the last trade. One of the others are interesting in the Dow Jones E-mini is trading at 25,596. A lot of resistance up there at 25,680. And all right, and the crude oil is trading at 39.61. We still believe crude oil's made a major top up there at that 81 and change. We took it out on both ends of the spectrum, in other words, going above the highs of the last weekly highs, and then completely reversed. There was no interest in buying up at that level, so that tells us that 41 is going to be a pretty interesting one in the crude oil to get through. But remember, it's come a long way from minus 27, well, actually it was $6 a barrel, from $6 a barrel all the way up to 41. So that's a big rally. Of course, everything else has rallied also. The NASDAQ is setting right at the 78% level, I believe. Yep. That came in at 10,750. That was our key price from yesterday. So I still think it's a key price for today. And the S&P, we're still trading at 3143.5. If it gets above 3152, then I think it's probably breaking out. But right now, it's setting at major resistance, and whether that'll stop it or not, I'm not sure. But, the real funny part, folks, is nobody else is sure either. So you pay your money and you take your choice and see which one sets up the best. That's pretty much what you try to do. All righty, now we've got a break coming up. I hope pay a few bills. If you have any questions, folks, for Bill Meridian, you can call in at 877-927-6648, and I'm sure he'll be happy to answer them. Al tells us that the board is all lit up right now, but the lines will be opening shortly, and you'll probably be able to get in if you're really feeling lucky. By the way, folks, watch the gold at 1818. That's a very important number. We're trading at 1814 right now. We'll be right back. 877-927-6648.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. I believe we're talking with Bill Meridian, Cycles Research. Bill, are you there?
Yes. Good morning, Larry.
Good morning to you. Bill, before we start, we have a question. Actually, two
Sure.
people have asked the same question. Does DJT have a chance of being reelected?
I haven't looked at that yet.
Okay, not a problem. Maybe next time we have you on next week or the next 2 weeks, it's got plenty of time till November 3rd. So right now, what would you like to start with?
Well, I sent a PowerPoint to you.
I'm ready to go. I've got the 2020 forecast up with the S&P. That's what chart 3 is what I'm looking at right now.
Well, first, I just wanted to mention that the Foundation of the Study of Cycles has returned. It's at cycles.org. If you're interested in cycles, come and take a look at the website. And this hasn't changed. I only spoke to you a few weeks ago. The S&P is likely to top in January, I think. Bonds will be flat to down in July, as we'll see, and gold is going to move higher into year-end, probably over $2,000 a share. Okay. And so now I've got the best trade coming up here, and that is this is to go long guns and short New York real estate. U.S. gun sales surge in June, and there you see the sales. And there you go down one. I was wondering if this would ever happen, having lived in Manhattan for so long. Apartment sales have plunged more than during the financial crisis. And no matter what numbers you look at, the average rent now I think is $3,200 a month.
Rent? How big apartment is that?
Oh, it's probably a one-bedroom.
Wow.
But when I lived there, it was $260. When I got out of school in 72, and then I was paying $580 when I moved off to the Middle East.
Wow.
So those are the first two graphs. And now, next one, get ready. This is what happens when you don't know how to analyze markets. That is a record number of hedge fund closures.
Wow.
So at the moment now, we're long guns, short Manhattan real estate, and short hedge funds. I always wondered when I was largely doing fundamentals in the 90s, and when 2000 hit, lots of people said we'll form a hedge fund, and I said, well, forming a hedge fund, you have to know how to go short as well as long, and nobody's been short since about 82, and it's now 2000. And I remember being in the sauna in New York City. I had my eyes closed, and I heard these two guys come in, and I opened up my eye, talking about and they're in their late 20s maybe. And I'm saying to myself, so this is real trouble. So according to, I think it was Ned Davis research, I think 1 year later, the hedge fund failure rate, I think by 2001 had gone up 40, that's 40, not 40 times. Because they just weren't closing before then. And suddenly a spike of people who can't predict markets. So this is what that looks like. So
that's amazing.
And I have some. It's because we just spoke, and my opinion hasn't changed that much. I put in some individual stocks, and this is the earnings per share surprise method. This was in my first book, Planetary Stock Trading, now in its 4th edition, in which we take a horoscope set for the time the date and time the stock begins trading. It's the date of the opening, which was, of course, 10 a.m. for many years. Now it's 9:30. So what comes out of this is, I believe Pepsi, PEP, which has been underperforming since 2008, could report an earnings surprise, could provide an earnings surprise. They report Monday before the open, so you have only today to buy it. And then there's Delta. They report Tuesday before the opening, so you can buy these two on Monday. That, I believe, will be a positive earnings surprise. And these I'm only holding for 1 day because, Pepsi's relative strength line looks like an Austrian ski slope. It's going straight down for 12 years. I don't know why anyone would hold it, but they do. And also Monday, I would sell short JP Morgan for Tuesday. So I was just short, by the way, yesterday. I still have it open, Bed Bath & Beyond, which was down 25% yesterday. It's coming back a little today. And Walgreen, which is WBA. So the method works works very well. The batting average is around 70%. So 2 of these 3 should be right if the historical average applies. Mm-hmm. So there I've given you something a little different. Now let's go down one to the monthly S&P cycle. I haven't bothered putting the weekly in because they both point up. They both point up, weekly and monthly. They've been highly reliable. Haven't had to re-optimize them all year long. And this coming week is option expiration week. So if you go down, Larry, one more slide.
Okay. Bill, I have a question from one of our listeners, and that says the question is: does your phone ever stop ringing because you have such a great track record of, showing where the market's going in gold, oil, and stocks? I mean, he thinks you should be the most busiest person ever, and I don't know the answer.
No, I keep a relatively low profile because, Larry, you're familiar with contrary opinion.
Oh, yes, sir, Bill. I sure am.
So that's why I don't want to be on the cover of Time magazine.
I don't have much chance of that, but I agree with you there. Yeah,
well,
I agree
try
with
it
that.
every. My practice consists of my main clients are big institutions, people I've known for at least 10 years, and I've told this. They do know. I mentioned Pepsi. I actually had a woman have me look at her portfolio. It's managed. We won't mention the name of this company because don't want to embarrass Morgan Stanley, but they are holding Pepsi. The relative strength topped in 2008. It's going straight down ever since. And I said, look, here's where I can earn my money. I said, all you needed to do is buy an index fund instead of this, and you'd have enough money to pay me plus something left over. That's only one stock in the portfolio. It's really amazing. And that's why I'm not at all surprised. And Larry, after all these years in the market, I focus completely on price. When you buy it, you get the price. When you sell it, you get the price. You don't get the earnings, the latest number of Elvis sightings, or the book value per cubic centimeter, or any of those numbers. And this is what happens when you concentrate just on price. And anyway, this is option expiration week in July. That is the expected return. In other words, the probability that it is going to go up times the percentage increase. So it shows a net gain for the week, but it is not one of the strongest. It's about in the middle of the pack of the 12 months. So we've got weekly going up, monthly going up. We have OPEX week, and I showed you that what few people realize or use the Jupiter-Pluto conjunction. I showed you that the last time.
Yes, you did. You sure did, yes.
There have only been 10 because they don't happen that frequently, but all 10, the market has been up substantially following that. That occurred on June 28th, so we're still in that time period until the end of the month. So the only weakness I could see here might be at the end of this coming week, at the end of OPEX week. You might have some consolidation.
Mm-hmm. Okay, we got to pay a few bills. Could you stay with us to the first break? You got to pay the bills. 877-927-6648.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Direction's daily S&P 500 bull and bear leveraged ETFs. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks, and we're talking with Bill Meridian, Cycles Research. I believe we're on chart 10. That's the S&P.
S&P daily. Yeah, I just wanted to show you the oscillator shows, if you look in the late June, early July, it shows a little bottoming in formation, and it's in a little pattern. You could sort of draw a rectangle. I'm expecting it to break out of that in the next sometime in the next few trading sessions and be higher by next Friday. And now let's go down one to the S&P monthly and look at this. I mean, the oscillator, it's not even overbought. It's down in oversold territory where it was early 2019, close to that low. So what are some of the conditions that confirm the cycles? And here we have the usual, my favorite formula, money plus bearish sentiment equals higher prices. There's further bullish evidence from the market pros. Okay, so the hedgers who are usually right, they bought the decline in prices aggressively and then held on. Now, if you look at their pattern, as the market rallies, coming off a low, they usually start selling. They haven't been doing that. In fact, now they started adding. So that means the smart guys are loaded up on stock. Corporate insiders who are a little slower, but they're looking at that decline in the market and they're saying, hey, I'm not going to get stock in my own company this cheap again. So they also started buying, but they've maintained their acquisitions of their own shares. It's the highest level since late 2011. Now, I didn't look last night, but the American Association of Individual Investors, AAII, has a poll that closes every Thursday night, and it was 22.2% 1 week ago Thursday. I don't think it just hasn't risen. So this is telling you that the people who are the least sophisticated have not bought even as the market. They got too rattled by the decline. And they're looking at the news, the presidential election coming up, one scandal or one witch hunt, I should say, after another, the COVID virus, and I guess that's got them some paranoid to some degree, or bearish at the very least. Mm-hmm. And so now here we have a contrary opinion buy signal. United States commercial-backed securities delinquency rate by property type. This is from The Economist, obviously. And so I'm thinking, is this a contrary opinion buy signal on the real estate sector? So I'm going to start looking through those stocks because I don't know how much worse this situation could get, but my guess is there, several friends of mine said they're going to extend this lockdown right through the election. So my guess is there'll be some miracle 1 week after the election and we'll all be allowed to go out again. I had a black hat on and a black jacket. So when this thing started, when it was a bit cooler, and I had a blue scarf. So I put it in order to go in a local store. I went in, I wrapped it around so I was black with this blue kerchief. I looked like a gunfighter at a Gunsmoke. And I picked up a banana, walked to the counter, pointed it at them, and said, "Okay, stick them up." And they said, "Sir, you're going to have to rob us another time because we don't have any money left." So also on real estate, Manhattan's rental market is starting to show the damage from a pandemic-fueled exodus. Also, a socialist mayor and communist governor. The borough's apartment vacancy rate in June rose to the highest on record. Available listings surged 85% from a year earlier to 10,789, an all-time high for a single month. All that inventory put a dent in pricing. The median rent slid 6.6% to $3,242, the first decline in 18 months and the biggest in data going back to October 2011. So that's the condition of real estate. You could never go wrong owning any asset class until the cycle turns against you. And I had been on China. I had been pounding the table. You hear that? That's me pounding the table. To the institutions to buy China, and you see how much, look what's happened in the last few days. And the reason being, you look at that cycle, that is the monthly cycle, and you see that last low. I pointed out the relative strength was firming, despite all the chaos in them. I said, coming out of this, China is going to be one of the top markets. And I like it because it makes no sense. It is contrary opinion, to the nth degree, because you've got the virus, relations between the USA and China, and so on. So if we go down one more, we'll see the monthly graph. And now what I like, that blue line in the middle is the momentum. And look at the higher lows. You see one there just prior to September 2018. You see another right after May 2019, and a third higher one, May 2020. And you see the relative strength, the green line versus the S&P, and you see it picking up. And this, to me, is the primary technical pattern that I've used over the years to make money. Like, if you remember me recommending Eli Lilly, it's still in the newsletter. This is the type of pattern it had, except Lilly had a longer downtrend in relative strength. And now look, you see that breakout from anybody knows it's a breakout from a triangle, but I had institutions adding to overweighting China back in March, April, May, June. And so it's a combination of a flattening relative strength line, which is the green line. And if you want to know how much time, well, 6 to 12 months. If it doesn't make a new low, it's building a base. And then the higher lows in momentum, you can use any momentum indicator. I have my own. And then there's the upturning cycle. Now, if the cycle weren't turning up, it would tell me there's more time required. The market is going to go sideways for a while. Oh, that's weekly. Let's go down to monthly. There you go. You see the relative strength isn't quite what I'd like it to be, but it's been basing now since late 2018. It's 2 years. And you see the higher lows in momentum. This I learned from Ian Notley many, many years ago. And so, and by the way, there's, let me get to that at the end. Let's look at U.S. notes now. We're going to do this quickly because there's nothing to look at. July is usually an up month for notes, but both of the cycles point down. So that's a standoff. I think that line you see there, U.S. notes, page 18, that's just going to continue going sideways. So if you're a bull or a bear, I mean, you could write options on this. The market's not going anywhere, I don't think. Okay. So let's go to a market that is going somewhere, and gold seasonality. June through September is the strongest period for gold. Again, this is expected return. It's the probability it's going to go up, which I know the probability in August is 60% and in September 61%, times the average increase. That's what you're looking at, expected return. So now let's look at the cycle. Now look at the monthly gold cycle. So these cycles in the histogram are static. That is, they don't change very much. But this is dynamic. So the best cycles world you can possibly have is to have the combination of the two. And of course, as I always like to jest, this does not isolate us from, a 9,000-year cycle. The last time it occurred, it wiped the pharaoh out of his wheat positions or his gold positions. If something happens once every 3,000 years, we don't know how to measure that.
Wow.
So
we have to pay a few more bills. Yep. Stay with us. We want you to come back, please. Bill Meridian, Cycles Research. We'll be right back, folks.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Bam! If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. Bill, I posted your information, BillMeridian.com. Did you want to finish up the show, or would you just like to tell the folks how they would like to
well, I just want to point out the gold breakout to 2000. It points to 2050 from this ascending triangle.
Mm-hmm. That's easy to see for sure, and it's certainly looking very, very strong. The old high happened in August of 2011 at 1931. You're expecting it to get above that then, somewhere around 2050, somewhere in that ballpark, 2030?
Oh, yes, yeah.
Well, okay. Well, you've been spot on all the way. You want to tell the folks how they can get in touch with you? BillMeridian.com?
It's BillMeridian.com is the website, and it's bill@cyclesresearch.com if you'd like to send an email. I have a monthly newsletter, I have institutional services, and I have books for sale if you're interested in planets.
Okay. Boy, you've got a lot of stuff, that's for sure. Well, listen, I want to thank you for being on. We'll have you on again in 2 weeks, and I really appreciate you being on. Any possibility going back to Austria someday in the future?
Well, maybe in September. I have an Austrian passport, so they have to let me in, but I'm supposed to bring a certificate showing I've had a test within 4 days. The problem is the results don't always come in 4 days.
Wow.
And so I can book the flight. If I don't get the results, I don't fly, or I arrange to take a test at the airport, which means you have to sit there and wait for the results for several hours. So I'm going to try in September.
Oh, well, good luck to you, my friend.
By the way, everything is open in Vienna.
It's just no social distancing, or just everything's...
No face masks, no nothing.
Well, and how's been the virus? What's been going on? Any increase in deaths or anything?
No, they have a population of 8,650,000 people died, mostly elderly. They shut down everything immediately. I mean, there were no public venues. There were every museum. Everything was shut down instantly.
Mm-hmm. Well, it seems to be the key, that's for sure. Another key is to try not to get old.
Yes.
Hey, listen, buddy, thanks for being on, my friend, and we'll have you on in a few weeks. Bill Meridian, folks, Cycles Research, Vienna, Austria, and we will see you on Monday, and hopefully we will have Norm Winsky as our guest.